I'm Owen Bigland. This is the Inside Edge video blog. Okay, a question I get quite often from clients and people I meet, people that have read my book, will say, Owen, how do you sleep at night, with the constant volatility of, say, the stock market and saving for retirement, the ups and downs. And, we just went through a 30-plus correction in a matter of about 6 weeks in the S&P 500 at this time last year, where my portfolio took a 35% haircut in a very short period of time. And I tell them, it's easy. It's the same reason I slept well at night back in the 08-09 financial crisis, where my portfolio at that time was cut in half, 50%. It's easy. I tell them I just don't drink coffee after 2 o'clock. I sleep like a baby. I work out, exercise, eat right, get to bed early and get up early, and I have no problem sleeping. Case in point, as I said, we just had a 30% correction at this time last year. My portfolio was down over 7 figures. I'm not saying this to brag. Over 7 figures is what my portfolio was down. I told people back in 08, my portfolio dropped over $1 million on paper. It didn't mean anything. It was just on paper. But I now, 12 years later, have a much larger stock portfolio than I did back in 08. So you guys tell me, how did I look last April, March, April, when the markets were dropping 1,000, 12, 13, we had 1,500 point drops in the Dow. I was fine. As a matter of fact, I was excited at the time. Yeah, on paper, I was losing a tremendous amount of money on a day-to-day basis there. There'd be some huge, as I say, 1,000-point drops. But fortunately, I've been through these many times. This one was a sharper correction than it was in 08, but it wasn't as severe. And fortunately as well, the market picked up and corrected itself. I think it's the fastest ever on record. We went from the low to regaining our former highs. I think it was about 138 days, which is incredible. Most corrections like that lead to a bear market, can last 3 or 4 years before they recover. But that's the way the market was. The Fed started printing money and money came back into the markets and off she went again. It was a sharp V recovery. But back at those times, have a look at the videos. If you were following me on Twitter, I was staying calm. I was actually quite excited because fortunately I have a big enough portfolio that I've always got dividend checks coming in. A steady flow every week of cash that I can deploy. I've also got commission checks coming in from my work that I set aside every month to buy more shares, equities. So I was buying stuff at fire sale prices. As my videos back last year at this time, in my Twitter feed, I was tweeting out all kinds of companies that I was buying at the time. I put my money where my mouth was. Now, of course, a lot of those companies I bought at this time last year are up between 70 to well over 150%. So it's been great, but the reason I sleep well at night, other than not drinking coffee in the afternoon, is because I know what I own. You're not just gambling in the real estate market, or you're not just gambling in the stock market. I buy the best. I buy quality. So in real estate, I'm owning quality Vancouver homes, condos downtown, and I've got tenants in them. I have nothing to worry about there. Sure, every now and again, my tenant will give me notice that they're going to leave, he or she is going to leave, and I'll put a new tenant in there. I usually will raise the rent. For my stock portfolio especially, because that moves at a much, much faster pace than what the real estate market works. Real estate's like watching paint dry. The stock market works 10 times faster, trading in and out. You can trade 5 days a week. Stocks are up, down, high volatility. The reason I have absolutely no worries or concerns is because I own really high quality companies. I've listed them off many times, the Apples and the Johnson & Johnsons and Macdonald's and Visa and Costco's and Home Depot's. I own a lot of ETFs, so I own the S&P 500, I own the VIG, the Vanguard Dividend Appreciation Fund. So just in my ETFs, I probably own somewhere close to 3,000 different US companies. I also own European ETFs, emerging markets. I'm well diversified. I own thousands and thousands of companies, and I own about 30 individually. So all these companies, what I focus on is what I own. If it's Macdonald's, I know Macdonald's, sure, the stock is going to go up and down from time to time, but they're still going to make hamburgers, they're still going to make French fries, they're still making money hand over fist. They're going to continue to pay me a quarterly dividend every month and raise that dividend every year like clockwork. Same thing with Johnson & Johnson and Apple. Apple's going to continue to raise their dividend by double digits every year. They're going to continue to buy back billions of dollars in stock, which is going to shrink the share count, which will juice the price up over time. These are just the basic fundamentals. Now, again, the stock market is bipolar. She's going to go up and she's going to go down at the whims of the traders. But you just stay the course. One of the best ways I've told you how to stay the course, and the chapter I wrote in my book about how you treat your portfolio like an apartment building. And I've had so many people comment to me how that got them thinking a different way about how the stock market really works. You look at your stock portfolio like an apartment building. Every unit is a stock. Every unit is going to pay you a quarterly rent to keep it if it's paying a dividend. Most of my companies that I own pay a dividend, not all. I've got some growth names like the Googles and Amazons that don't pay me a dividend. But most do. That will help you stay the course. Because in 08-09 financial crisis, my portfolio was cut in half. I can tell you that I can count on one hand the number of companies that cut or eliminated their dividend. So if I had 80,000, 100,000 coming in every year in dividends, that didn't stop in 08, 09, 2010. That money continued to come in, just like it was an apartment building collecting rent. Sure, the underlying stock took a 50% hit, but within 3 or 4 years, I was back up to where it was before. In the meantime, I'm collecting those cash flows, and guess what? I'm buying back in more shares at fire sale prices, which just magnifies your gains from that point on. So that's one of the best ways. I just focus on what your portfolio is producing for you. And if you own the right companies and the market takes a correction like it did last March, you have very little to worry about as long as the underlying fundamentals of the company haven't changed. And they haven't. Last year they didn't. It was just a broad COVID sell-off. You know, most of the movements you see in stocks, as I talk about in my book, have nothing to do with the underlying fundamentals of the company. It's just traders moving in and out, large institutional traders. You know, oftentimes they might have a large redemption where they have to sell $100 million worth of shares in a large fund. Or they see other names that they think have more potential. So what they do is they'll sell some of the stalwarts like a J&J or a Macdonald, sell 50,000 or 100,000 shares of that to raise capital to pay out those sellers or those investors that are cashing out, or to move it and rotate it into better names. Doesn't mean that there's anything wrong with J&J. They're just rotating or churning the portfolio for various reasons. You have to understand how the stock market works. It's why I always tell people you got to do your 100 hours. Just the basics of how equities work, how the dividends are paid, ETF in index investing, which will do the trick for most of you. Pretty easy to stay the course if you understand what you own and why you own it. Otherwise, you should just stick with index investing. If you want to get into individual stocks, you better know why you own it. I can tell you in great detail every single company I hold and why. I can tell you in a lot of cases who the CEO is. I can tell you what their last earnings report was. I can tell you how many shares they're buying back. I can tell you pretty closely exactly what the current dividend is and what the current payout ratio is on every stock I hold. That's what you have to do if you're going to buy individual stocks. You have to know why you're holding them and how they fit into your overall portfolio. Pretty easy to stay the course if you do that. You know, when it comes to real estate too, again, I want to stress to the friction costs with real estate, why you do not want to be a trader in real estate. And I'm a realtor. I make my living selling homes. You know, the friction costs are going to kill you in real estate. That's why the real successful real estate investors and people that make a lot of dough in real estate, the ones that you see those envy articles written about in the Globe and Mail and the Vancouver Sun about some East Van homeowner who sells his house and makes $2 million and he's not entitled to it. Crazy. Well, yeah, they did it right. They bought the house, kept it for 30 or 40 years, renovated it, put a suite in, built a laneway house. Of course they're going to make a pile of money. That's how it works. You know, the other thing I'll just touch on quickly, God, there's a lot of fake, envious, fake, biased news articles there, not only towards of course, to Vancouver real estate, but also with investing. 9 out of every 10 things I see in the media is negative towards Vancouver real estate, especially. They've always got a hate on for that. I saw an article the other day saying that the Vancouver market just had 13 years worth of price gains squeezed into 12 months. Total lie. But you see, nobody checks these people on these things. And you see, if you look at the comment section in this, it's that echo chamber, that misery loves company crowd that takes this loser reporter at his word that that's true. And it's a blatant lie. There hasn't been 13 years worth of gains in the last year. I mean, the detached market's up between 12 and 25%. But that's not 13 years worth of gains, and some stuff hasn't gone up that much. The condo market is up in the last 12 months, maybe 5%. That's not 13 years worth of gains in the condo market. As a matter of fact, as I've said a couple of times here, we're not even yet to 2017 prices in a lot of downtown condos yet. We're not there yet. We might get there later this year, but we're just getting back up to where the peak price was in 2017. But these are these envious, biased, one-sided articles that for people that have been priced out of the market, misery loves company, this echo chamber of negativity, and they suck this stuff up and believe it when it's a total lie. What I've said many times on this blog, and I talk about it in my book, what did you expect the price of Vancouver real estate to do? If you buy a home, people are always flabbergasted by what I tell people here. My rule of thumb is if you buy a condo or a detached home or anything, and you hold it for 15 to 20 years, you're going to double your money. Let's call it 18 years. So if you buy a $500,000 studio right now for $500,000, in 18 to 20 years, it'll be worth $1 million. But some people are just outraged by that. That's 100% gain in 20 years. Yeah, that's what I'm telling you. As a matter of fact, I'm using ultra conservative numbers there. I'm using an annualized rate of return that's probably less than inflation. You'll see these people that detached has definitely been on a tear here, which is often the way it goes with detached homes over the last 35 years. I've been at this a long time. It always plays this way out. The detached market goes in these crazy spurts where it'll go up 15, 20% over 18 or 24 months. Then it tends to take a break, plateau, go down 5%, stay flat, and then takes another leg up. Condos are a little more steady, but they also go in these jolts. But I don't know what these people expected to do. They're outraged at 100% return over 18 years. Have you guys ever, and I know they haven't, because the people that are writing these things have no financial background. They don't know how compounding works. They don't know how leverage works. They have no gauge to what this compares to in other investments. 100% return over 18 years is very modest in Vancouver real estate. If they ever saw what companies like Apple or Visa have done for me, or Estee Lauder, some of the ETFs I hold, I guess they'd be outraged. My Apple shares are up over 1,000% in the last decade. I've got all kinds of companies that are up 4, 5, 6, 700% in the last 10 years. But you never hear any outrage about that in the media, that there's no way those Apple shares should have gone up tenfold. Or Amazon up, 1,500%. Shopify up 2,000% in the last, I think, 4 years. I've got companies, I've talked about it here. I was buying FedEx, Estee Lauder, Canadian banks, McCormick's, Costco, Home Depot. I was loading up whatever I could at this time last year. I'm up over 100% on a lot of those. So in other words, I've made what you're going to get in real estate over the next 18 years, I made up in 1 year in the stock market. On many, and these are not speculative companies. These is big blue chip companies that I'm talking about here. But you don't hear any media talk about the outrage with that. But somehow when a detached home goes up 20% over the last 18 months, watch out. We should step in and do something about it. As I've been pounding home here, you have to back away from some of these complainers, this fake news that's out there, this biased news. The final thing I'll leave you guys with here, I've stuck up and been in a couple of good dust-ups here over the last year. I've been laying low lately for a lot of reasons. I'm super busy. I don't have time, and I do not go picking fights. I see stuff out there right now that part of me would love to just go in and lambaste some of these guys for the stuff that they're saying in some of these articles and some of it's, in mainstream newspapers here in Vancouver. It's just made up by I don't even know if I would call these guys reporters. They're just clickbait artists, where they'll come to you and say, hey, get me an article on something. It's all clickbait that the market's going to correct. The real estate has had a 13 years worth of gains compressed into 1 year. Total lie. I see these headlines all over the place. They also love to hit you with the ones about mortgage fraud. There was some weird article I saw about a third-tier mortgage lender in Toronto that had a couple of guys that were not declaring, were forging their income, and how that was a big epidemic. It was bizarre. They were talking about some sort of employment letters that they were using to prove their income. Well, I don't have no clue what any of that is about. When you're qualifying for a mortgage here in Vancouver and you're going through a bank, which most people are, you're not giving them employment letters. You're giving them your tax returns. I mean, there's no fudging the numbers off your T4s and your Revenue Canada tax returns. I mean, if somebody is dumb enough to do that, you're going to get caught for sure. But those are the things they try and manipulate you with, and try and, stir up some anger and some envy. And what I'm telling people is just ignore it. Work on yourself. Nobody's going to help you buy a house, and get away from all these complainers. Outrage at the price of Vancouver real estate's gone up 20% in the last year. You should be outraged by it. Man, if you're outraged by that, I'd hate to see what you think of the stock market. But you can participate in these things. If you don't like that the prices have gone up 20%, why complain? Why not figure out a way to get into the market and stay in the market, as I've often said? Pretty easy stuff here to capitalize on all this good stuff. The low interest rates, the leverage, the principal residence exemption, the long-term capital gains you're going to get, both in Vancouver real estate and in the stock market. These are all publicly traded companies that you can own for very little cost. You can go through Wealthsimple now and buy these shares for virtually nothing. I tweeted out some stuff on the TFSA the other day. I mean, the TFSA, very few Canadians know what to do with the TFSA. And the average Canadian has something like less than $5,000 in there, which is ridiculous. The TFSA, the fact that they only give us $6,000 a year should show to people how powerful a tax-deferred investment vehicle this is. It used to be 10, but the Liberals have dropped it down to a pittance at 6. If you can't, and if you're not maxing out your TFSA every year, boy, you're in trouble. You should be maxing that out in the first quarter of every year, not at the end. You should have that money earmarked at the end of the year for the following year, every single year, and maxing that out, the full 6K. Take advantage of this stuff. The little bit that they do give us. And again, tune out all these articles that are just clickbait stuff. A lot of it I see is made up. I don't have the time to get into it because it's suicide for a guy like me. These guys, if I called them out on it, I would make their day, I would make their year if a realtor of my status was to come in and start criticizing it. Look at the dust-ups I got in last year with Bloomberg and Evan Sindall. I didn't go looking for those, but hey, if they come, so be it. But most successful people you're going to find, and I see in these comment sections and blogs, they're not going to wade into these, what I would call echo chamber of negativity. They're too busy making money and being successful. And they know that because it is an echo chamber of these misery loves company, you dare put anything in there that contradicts their narrative that everyone's out to get us, the market's rigged, everything is, can't buy a house, need the government. If you step in and tell them anything otherwise, you're going to get lambasted in there. And that just keeps perpetuating their problems because these guys, this misery loves company, they think, yeah, I'm not alone. I must be right about this because I've got other people complaining about it. Hey, sorry to break it to you here. Now, if that's you, you are headed down a very dark road. And it's going to get darker the longer you go down. You better turn a leaf quick on this and take matters into your own hand and do the mirror test. I'm Owen Bigland, still sleeping well at night every night. Remember, markets go up and down. There's going to be a correction here. It's going to slow in the Vancouver real estate market, maybe later this year, maybe next year. Who knows? Who cares? Buy it comfortably, leave some money for interest rate hikes, enjoy the home, keep it, let those capital gains compound, avoid the friction costs, and you're going to become a multimillionaire before you know it. See you next week.